Hi, I wanted to, answer a question that a lot of people think, and we think it all the time. How do you price or how do you come up with pricing for a loan? We're in the private lending space. We focus on either deals that don't have time to go to a bank or can't go to a bank. Some of what we do is considered hard money. Everyone has a different determination. So I just want to walk you through some of what goes into the thinking of how we come up with a price for a loan. We just don't arbitrarily pick a rate, 10.5% and 3 points, or 9.5% and 2 points, or 12 and 3, or whatever it is. There's so many factors that go into it. It's really complicated. Think about it if you were us. First of all, you take what type of deal it is. So is it a fix and flip? Is it a foreclosure bailout? Is it a debtor in possession? Is it a traditional bridge loan? So they're all different things. Some people say, oh, they're all hard money, but they're really not. They're different profiles. So the type of loan goes into it. Self-understood, if it's a bridge loan that is a bank fallout loan, it's going to be priced, it has a different risk level than a foreclosure bailout loan. So you have to take that into consideration. So that's one factor. And there's so many factors. I'm not going to talk about them all. I just can't, but I just want to give you an idea. Another factor is the size of the loan. The reality is it costs as much to service a loan and originate a loan for $100,000 than it does for $2 million. So, to be candid with you, if it's a small deal, it's priced more aggressive because there's just a lot of work that goes into it. A lot of lenders don't like small deals. So I get it, the small deals are more expensive, but again, it's the same manpower hours for the amount of work. So that's another big factor that goes into it. Another factor that goes into it, and I'm just gonna go into a few of them, is the credit risk. Does the borrower have good credit? Does the borrower have bad credit? Do we think this is going to be a problem to service the loan? So all these things go into it. States go into it. Where is it located? Is it an increasing population, a decreasing population? How hard is that state to deal with? How hard is that municipality to deal with? The time length of the loan. Does the borrower want the loan for 3 months or 3 years? We at Gelt Financial, we service our loans and we keep them on our balance sheet. They stay with us. So for us, the longer we have a loan, frankly, the more we make. So if we have a loan, let's say it's the same loan that's going to pay off in 2 months, or as opposed to 3 years, we look at it different. So there's so many factors that go into the loan, and there's 20 more. It's really, it's what we call risk-based pricing. So we look at the total deal in totality, and we run some numbers, and we say, okay, this is what we need to make on it. Self-understood, I'm not even talking about the economy and as rates go up and our cost of capital and other opportunities that if we place the money in A, if we place it in B, we could earn a higher yield. But all of these things go into the loan. No two deals are alike. Generally we're right now in high single digits, low double digits, but the economy, everything is always changing and things change all the time. And a lot of it, frankly, has to do with our appetite. So there's so many factors that go into pricing a loan. It's not just so easy to say, oh, the loan is priced this way or it's priced that way. A broker may submit us a loan and we may price it. Maybe it's a foreclosure bailout or it's a small loan. We may price it expensively, and they submit us another loan that is a different profile, and we may price it a different way. So again, I just wanted to make this very short video over what goes into a loan, but think about if you were in our shoes, what you would consider about pricing a loan, and that's how we do it. Not an exact science. It's more of an art. We don't hit the nail on the head all the time, but we try to price what we think the market is. And self-understood, everything is somewhat negotiable because there's so many points of a loan amount, points, interest rate, length, if there's a prepay or not. There's so many details of a loan. Every deal's a little different. And at Gelt Financial, if a borrower, or if you're the borrower, if you don't like a specific point, if you don't think we hit the nail on the head, we hope you call us and let us know, because we'd love to earn your business. So I just thought I'd make this short video on how we price a loan at Gelt Financial. Take care and have a great day.